Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 20th of May. Almost losing my days there now. We've had the Fed minutes. They've come and gone, and you can see here that the US dollar is higher across the board. Just giving you a look at the major charts. Now, the main thing is they have moved from basically we are not going to do anything on interest rates, for like a long, long time to basically we are going to be nimble with policy, and that opens the door for them to start managing the economy as they see fit. That doesn't mean it just runs into a massive dollar bullish situation, but it sets the structure for it. And it also sets up the macroeconomic data to really impact whether it's strong or weak. It should start to move around, and the dollar is now a really functional trading pair. The good thing is right now, so you get that initial drive into the market, right? You see these initial moves, and a lot of these currencies are just sitting around trend lines at the moment, waiting for the signal. Do we go or not? Okay, dollar CAD's already moved a bit. I think oil's broken down a bit as well. I think we can see dollar CAD higher. Now, the other pairs we're waiting for the next bit of data. We've got the sort of initial impact from what the Fed was talking about. Now we need things to fit into place. And what that means is we need economic data to come in and tell us what's going to do. So strong numbers here in the US now should lead to weakness in the equity markets, should drive the dollar block lower, euro, sterling, Aussie, Kiwi, and push the dollar higher. Right? That's the way I see it, sort of fluctuating. Now, for those in the Asian session, you can see the US equity futures at the moment slightly down. But what you generally get is you get a cycle of flow in the major currency pairs or the dollar. So it just doesn't keep going down, 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 unless there was epic news and it was fresh and there was more bad news on top of bad news, and then it starts to run. At the moment, the market has factored in the initial impact from the FOMC minutes. It's now structured. So what happens during, say, the North American session, the pressure will be on the downside of the dollar block, so the dollar rallying. And during the Asian session, you almost get a counter rally as traders sort of square up, trying to remove the risk from that Asian session. So just be aware, it's just not a straight line. We have to see things line up. Now, we've got Australian employment numbers out today, well worth checking out, right? Out of all the central banks, the Fed is the only one telling us what they're going to do with managing the economy. The rest of them are all sitting on their hands at the moment. So we don't have any directional information whether the employment numbers are weak or strong from the RBA. So is that likely to impact? Probably not. But keep an eye on it, right? Keep an eye on the numbers, because it can start to influence what the central bank is doing, like the CPI numbers have done for the US. And now I'd say during that, what to watch out for in the European and North American sessions. Well, anything to do with Europe is worth looking at. The German producer prices, for sure. If they come in weak, well, the euro's already got a downward bias. That would be an easy situation for euro to move. And keep an eye on the Philly Fed Business Index and the jobless claims, the weekly jobless claims out of the US. Two numbers that can really shape things. If they are better than expected, it fits in line with what's going on with the dollar, and we could see the dollar higher, equities lower, right? So you'll see the dollar higher, and if I draw a line between Swiss and euro, the dollar block, the bottom four currencies there should go down, dollar up, right? That's what we're sort of looking for. We're looking for flow. We're looking for connection with the macroeconomic numbers out of the US with what the Fed's talking about. That's when we get the moves. The last eon, we've been getting disjointed numbers that don't match up with what the Fed's talking about. So we don't get that clean move. Now we've got a situation where we could get a clean move, and that would be quite positive. Okay. Yields a little bit lower just at the moment on the treasuries. That's what leads to, maybe slow the dollar down a bit, but I don't think their treasuries are in play at the moment. They are sort of just sitting on the sideline like they usually do. Now we're talking about dollar strength. Equity markets should come off. Potential for higher interest rates in the US. It's a dollar strength situation and dollar block lower. So just keep an eye on that as we go forward. The Fed have laid it out for us. There's not much to do. Don't overthink it. Just wait for the moves to happen. Do I think the major pairs will run today? No, I don't. I think they've already had their initial move. We may get a little bit of a counter rally off some of these lows. But I tell you what, it's set up quite nicely in the balance. All we need is some strong US numbers, and that should be the straw that break the camel's back. Keep an eye on it. It's well worth looking for. All right, guys, have a good one, and all the very best with your trading. Cheerio.